The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it is a gorgeous, beautiful, almost sunshiny day in the frigid northwest of Florida, where it is, what do you got to say, probably 56 degrees. And, of course, no end to the amount of yelling and screaming and gnashing of teeth, of winter parkas being thrown around, getting ready for the apocalypse as we near 50 degrees and probably into 40s. Low 40s tonight at the headquarters of Technical Trading and Investing, TFNN.com. Of course, we're hypersensitive to temperature changes down here. And with the exception of a few people that were dropped on their heads as babies, we like warmer weather. Steve Z, one of our engineers in there, the goofy guy that always wears the not the Tony Stewart. What's the little racing guy's name that was big in the 70s. I can't remember his name now. He was always, I'm Mr. Stewart, and I race cars. Forget what the guy's name was. A little Formula One driver guy. But anyway, today we celebrate how can I say it? We celebrate the publication of the first Thesaurus by Roget. He retired from professional life in 1840 and spent about 8 years preparing for a publication of the work that would perpetuate his name in memory, Roget's Thesaurus. I guess there's other thesauruses out there, but it was called the Thesaurus. I can't even say it now. The Thesaurus of English Words and Phrases, and printed in 1852. But probably the most interesting thing is the comedian, I forget his first name was Wright, who always asks, what's another word for thesaurus? And think about that one real hard, because there isn't one. It's one of the few words that doesn't have any other words that are like it. A thesaurus is a thesaurus. Anyway, we go on to the market, which is predictably flat. We talked a little bit about this yesterday. We'll talk about a few stocks moving around here, but for the most part, S&Ps are flat. We've got 2.5 billion shares on the consolidated tape. Volume's going to probably be kind of light in here. Little movement. We'll talk about the stocks that are moving. Probably the most important one is Apple. It's probably going to close within, I would say, 50 cents of $500 on the nose. Said that yesterday. Also predicted a little bit about Intel's earnings. We'll talk a little bit about that. Intel did come out with earnings. Basically, they'd run up into earnings yesterday, pulling back today. And we'll see what's the current quote on. $21.15 off $1.53, or just under 7%. So a nice move in Intel. The numbers were kind of okay, in line. Nothing really to write home about. The stock is down at $1.53 because they're finally going to start spending some money in building new fabrication technologies. So they're down about 7%. A lot of the companies that feed them, like Clack, probably Clack didn't do the best. Let's see, take a look at AMAT. AMAT's up about 1.5%. Clack, let's take a look at it real quick. Flat, but there's a lot. I think we started to see those yesterday starting to move. But a lot of those suppliers to big fabrication houses are doing fairly well today. But that's mostly on them basically, or Intel basically, deciding to spend a couple of $2 billion in just that sector. The reason they're going to do that is by the middle of this summer, they're going to be coming out with a new line of processors. I've been covering it in the Tech Insider a little bit about that today in today's edition, but you can always read a little bit more about that. BAC, of course, when we look at that coming off earnings, it's off half. Well, what is it off? Yeah, 1.5%. So, what can you say? It's a lot of these were really kind of frothy as they got up to the top. We'd been talking about looking at the XLF and having a pretty good sign that this thing was fairly toppy. So let's see what we got here. I need to get one more thing moved. I don't know what happened here. XLF, excuse me. And we've been looking at this thing kind of making a top on the financial select spider, which is the XLF. You were going into 120 million share high. You've gotten into that about a penny shy, but with 61 million shares. You're going to have quite a surprise to get this thing to break out on the top. I suspect we're in for a little bit of a retracement down to about $16.50. We'll talk about the reason why in a few minutes. But anyway, not such a bad day out there. But what else do we have for the most part? A flat market that is not unexpected on a day of expiration. And, of course, normally you have options rollover on Monday or closed for this Monday. So we're going to get back on Tuesday. I expect that we'll probably have a little, if this is the top, we'll probably have maybe one more 10-point push in the S&Ps. That may happen very early in the day. They're going to have to get options expiration rollover pretty much done all day Tuesday. So look for some very choppy, very fast trading. And probably at the end of the day, you're either going to want to go long or short. After a 3-day vacation weekend, the markets normally change a direction or a character. So if the market was nice and smooth, you expect a change in that to a very choppy market. If it was a very choppy market, you look for trends to actually set in and be nice and smooth. Called the rule of alternation. Normally does work, and normally you see that. A lot of times you will see direction changes on these 3-day weekends, but almost always you get a change of character in the market. So when we get back Tuesday, we're going to be talking about and looking for that change of character and see what it's like. Let me see, move around here. Of course, we had Morgan Stanley also out with news. A nice little bounce in it today. It's up 7%. One of the few stocks that actually had some decently priced options, but I did not play them. But they went from about 40 cents to $2. Not a bad deal for playing this option expiration. I just didn't catch it, but there's a few plays out here. Even on days like this, there's always a bull market somewhere. Let me get some other stuff done. Here, just doing some house cleaning. But what I really wanted to get to is start looking at some of these charts. The first one is Cree. We're going to have earnings on it on Tuesday, and I think that's after the bell. Take a quick look at it. If we can get to it. There we go. Cree, yeah, it's pretty much up at these highs. We've had a couple of tests of these tops. I'm looking back at $31.34, 9.3 million shares from the November 4th high of 2011. Tried to get through that in May 7th and came in with lighter volume. We've been doing kind of the same thing. Nice little move out here today. I think we're probably going to get a long-term trend in Cree probably on that Tuesday earnings. More than anything now, with all the laws already going through, with all the announcement of their new products, probably going to get a good indication of what's going on. This did come down on heavy volume just a few days ago on the 7th, and it's pretty much made that all back, that gap down back. But kind of tough to actually see a lot in that stock to get you really excited at this moment, kind of going sideways. Others out here in earnings land is going to be CSX, the rail company, also KSU, and Norfolk Southern NSC. So we've got 3 train companies on Tuesday. We also have Google. Better take a quick look at Google here and see what that's doing. Don't really get a good sense for Google earnings here. This is kind of looks like it's making an asymmetrical triangle back to about $700. I suspect a little bit of this is options related, but I don't see a real clear signal out here that would have me going long or short Google. But they probably still are one of the stronger ones in the well, could I say, in the NASDAQ, and you know, for a lot of them getting fairly beat up, this one's been able to hold above that $700 range now for a few weeks, but getting narrower and narrower in its trading range. Another one that we are interested in coming out next week is going to be Wednesday and Apple. And, oh yeah, Tuesday we also have Verizon. So got a full trading week starting with next Tuesday. Apple, of course, is going to probably close out here at 500 for options expiration. You're going to get right into it. Probably have some decent volatility, I suspect, on Wednesday. Probably have a pop into earnings. And, you know, maybe we get back up to, you know, maybe we go down to 486, see 500, unless they actually air all their dirty laundry on next Wednesday and get the stock to move. But I expect it to continue to sell off. We had more news today from Sharp that even the display orders for them have been cut, so for the displays that they make for Apple. So we continue to see some of that going on. And we do have a phone call, so we're going to go right to that. David from Oklahoma, how you doing today?
I'm doing great. And yourself?
Good. What do we want to look about? What do we want to look at today?
I wanted to look at Open Text Corporation, OTEX.
What are you thinking about doing on this?
They've got earnings coming out this next Thursday.
So are you talking about holding through that, or buying, or shorting, or what?
Looking at going long on it into the earnings.
I mean, you had a good, the really good last signal to buy this thing. Are you long it right now?
Not yet.
I mean, the big clear signal would have been, for me, would have been a long time ago. It did test the low of June 12th last year, $45.27, that had 630,000 shares, with almost half that on July 31st. Your close back above it would have been your buy signal. Can you hold on through the break?
Yeah.
Okay. We'll be right back with David, my namesake. Dave's not here. Anyway, we'll be back in just a minute. You can give me a call, as always, at 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we get back, we are looking at, or talking with Dave about OTEX. They make a lot of technology. It's kind of like an open, kind of like Office, word processing, web integration for data, processing documents, a lot of that kind of stuff. Are you still there, Dave?
Yes.
Okay.
I was kind of looking at playing the options on the upside on earnings. It looks like to me that probably they're going to go up to that last swing point back from April or May.
62.70.
Right.
Yeah, that's your upside. Your downside is most likely the high volume move on the 9th. The 9th of was that July? 10th of July. You had 1.5. Is that right? 1.5 million shares that day. So you've got kind of the top of that at 55.27. I don't know. So what are you thinking on options? Which one are you looking at?
I was going to kind of wait until a little closer to the end of the day to see what expiration is going to bring me.
So you're thinking what, maybe February options, or
Yes.
March or May?
I'm thinking more of the February options, shorter term.
So let's say that you went with 55s. They're about 80 cents. Probably not a bad play, but you've got like 3 to 1. I don't know. I think your risk rewards very right on the edge right now. Let me put it that way. If you could get this thing to pull back to like $58 on Wednesday or something, and be able to get them for a little less, but you need probably a buck and a half pullback, I think, to get if you want to buy calls on this thing or puts. Let me look at these other ones here. 55 call options, 60s. Yeah, I mean, they're kind of expensive on the call side. The put side's not so bad, but that's not what you need. 55 puts, 60, still awful expensive.
Depending on what Tuesday brings, I mean.
Yeah, the VIX is 13. I don't think you're going to see a lot of change in the price of these things on Tuesday. In fact, they'll probably ramp up by noon on Tuesday. So if you're going to make a play, you're probably going to have to buy them before lunch on Tuesday as they kind of ramp into expiration. But I'm just doing some mental calculations, and these things look like they have a spread of about 4 or 5%. So what's 4% on $60? What is that? It's going to be what, $2.5. So this thing's going to have to probably move more than $2.5 for you to get any kind of decent money out of it. The question is, if it really knocks it out of the park, you get $62. Then you make money on it. You got to make it. This thing would probably have to be about $58 and pop over $60 to make a decent risk reward for you. So maybe you get the pullback on Monday you're looking for, but I don't know. It's kind of an edge case. I would have much liked this thing if you were back at like $56,
Right.
buying the upside to it. I just don't. You just don't have enough. Let me put it this way. I don't like this particular trade for one reason, and that is you just don't have so much upside, and you don't have so much downside, and the options look rather expensive to me for at $2 for if that's right, $2 on the 60s. But yeah, it just seems awful expensive to me because you've got to get this thing to move. Well, what are you? Yeah, so you're around $60 now. You're going to see a lot of that premium go away on Thursday when they're expired. Is there something that you know about this company that makes you think they're going to have real big blowout earnings or something?
Well, they've been building a lot of cars here to go up. I mean, they've been traveling in weekly wise sideways since July of 2011, basically.
Yeah. The one thing I dislike, do you watch on Tiger TV?
Yes, sometimes.
Okay. The one thing, why it can get back up there, the one thing I dislike about it on this one is the April 17th of 2012 high had a lot of volume down to the $45 lows. So you had a lot in that. You've got enough resistance. Wow, we're already through this break, huh? I don't know. I tell you, it's a tough trade. It's going to be tough for you to make money, let me put it that way.
Okay.
Good enough.
Well, thanks for your info.
You bet.
Yep.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we're back, and our first caller here after the bottom of the hour is Max from Houston. How you doing today, Max?
I'm doing just fine. Thank you, David, for taking my call. I got a question on the. Yesterday I bought some April 20th Intel puts with a strike price of 22, so I'm in the money now. Mm-hmm. But is Intel done pretty much going down after this? Or?
It's probably going down in the low 19s, but the problem you have is they've probably already sucked out the majority of the premiums for this today, haven't they? I haven't looked at it. Yeah, so I mean, normally what you got to do is be the first one to sell them out when these stocks blow out like they did. Okay. The premium should come back into it probably. Which one are they, February's?
No, April.
Okay, they're April's.
The April 20th, so I believe, yeah.
Let me pop.
So I'm in the money now.
Yeah, you're probably going to see, I suspect, a little bit more weakness on Wednesday in the general markets. And this thing is probably going to be in the $19 range. Let me see here if I can. Let me find my options. Okay. Okay, and these are March?
April.
Okay, April's. Okay.
So I have time. It's just I'm wondering if most of it is gone already.
Yeah, I mean, if you're going to sell them quickly, you almost have to sell them, when the market opens up early in the morning.
Okay.
But you've got VIX at 13, which means there's not going to be a whole lot of premium already. And these were the 22s?
22s, yeah.
Okay. Yeah. Okay. So you had a nice pop in this. What do you got? Let me go back and look at this just a second.
Okay.
You're right above that gap. You got a nice volume on volume retracement. Now, I would think that you're probably going to see $20 on this next week.
Okay.
I would tend to think that probably Wednesday you'll see premiums start coming back up and the VIX come up, and that'll probably be enough for you to keep holding on this. We've already had enough stocks miss, and as far as I'm concerned, most of these stocks, we've gone from 85% to 80% to 65% of stocks beating their estimates, and I figure we're going to probably be around 50% on this round. So, I'd be willing to hold on to it probably through Wednesday. But, you got a 3-day weekend, so they've sucked the premium out, or most of the premium out for the next 3 days by noon on Fridays, right? And in fact, on a day like this where this thing actually gapped down, they probably had the premium out by 10:30 if I went back and started looking at it.
I noticed that.
Yeah, but now I think you got a good, probably 80% chance at $20 next week on this thing. And, could you get down to 1923, maybe a week after that? Yeah, you could. I just think that probably most of the gravy is going to be gone on that trade. So if you can get a nice gap down, I suspect if you caught the first part of my show, you get a big change in character in the markets. I suspect we're probably going to have a pop on Tuesday, and that's a little pop. This is probably not going to pop with it, and then probably a pullback starting on Wednesday. And if you get a nice little pop down to $20, I'd probably sell these out right when it closes or crosses $20. I think you'd probably have an 80% chance of seeing that next week.
Okay. Well, thank you very much. I appreciate your advice and look forward to your software coming out.
Good enough. Thanks again for the call. And, I think we're probably going to see a little bit more weakness in this. Again, at the first part of the hour, they're going to spend about $2 billion going after the Arms Holdings business. And why they didn't say that directly, it's basically building the next round of 14-nanometer chips, why pretty much everybody now is at 28-nanometer chips. They are already going to be shipping 22-nanometer chips this summer to go up against a lot of the ARMS Holdings and Qualcomm chips that are used in smartphones and in tablets. I think they're probably going to be a good buy, but they're going to have to probably get awful close to shipping those, which is probably going to be midsummer. So Intel probably going to see weakness all the way through the first quarter of this year. In fact, I wrote extensively, as much as I write extensively, about Intel and their weakness and their future plans initially last September, but did an update on it today. So also in the Tech Insider, since I won't be on tonight, there's probably one of the first stocks that I've thought about playing as an IPO. I've played probably two of them in the last 4 years. MCP was one. I played it right after it came out. This is one that I'm probably going to be encouraging people to buy pre-IPO. That means calling your broker and asking them if you can get some shares. Outline that today in the Tech Insider also. So anyway, we'll be going back to that. If you want to give me a call, you can. 877-927-6648. 877-927-6648. And what else do we have going on? Still haven't gotten down with my news. So anyway, Wednesday's Apple, I suspect that it's pretty short, so you're probably going to see some big holders in that pop it on earnings a little bit anyway. But I suspect that's just gaining more steam on the way down. But between Google and Apple, if we get one of those probably to actually crack, probably see some extensive weakness next week. Consumer sentiment came out, and of course, just very, very bad, or let me put it this way, lowest since 2011. Not a lot of discussion about that, but consumer sentiment turned decidedly negative compared to its previous months. Mostly the consumers were citing the fiscal cliff debate. We'll see how that does. Also, the VIX is at 13. Had I guess, two nice calls where people are looking at options. I think that is extremely smart when you have VIX numbers at 13. It is probably better than buying the underlying equity. In fact, because you have limited exposure, especially if you're buying puts, stock can always go to the moon. But pretty good way of reducing your footprint out there. And at 13, they are lower than the low of 2007. But I didn't buy any because, of course, we're going to have 3 days of non-trading. But coming to Tuesday, if we can get a nice little pop in this market, maybe 5-10 points on the S&P and no volume, and a miss in either one of Apple or Google out there, I think we could see continuing losses. I'm not thinking Google is probably the weakest of the stocks out there. If Apple also says something wrong and drops the chalupa or the Baby Ruth in the punch bowl, got an ABC. Apple on the downside probably 465, on the upside probably 520, and just take a look at them again just to make sure. But pretty much looking for a $500 expiration today on Apple. It's printing off at $499. I bet that gets within 50 cents of that $500 by the close. This looks too sweet, too many options to kill off out there. And we'll look at it. Anyway, we've got what else going on? Oh, I wanted to get into some of these other stocks. But yeah, eventually Intel probably going to make its way down to this $19.23 move. But of course, you're going to have the premium on these deteriorate for a while. It's not a bad deal. Maybe take your money back down at 20, which I think is probably going to go through this gap probably fairly quickly next week. Let's see what other stocks are out here. We looked at the XLF a little bit. Go back here just a little longer. Going back up to that February 18th high. Really need to look at this and keep an eye on it on Tuesday. Of course, what do we have? MasterCard looking a little weak out here in the financial, along with Bank of America. Looking like a lot of these might have topped out. Now, I want the overlay. This is not a bad looking chart. You might get one more day up, which is what I'm thinking on something like MasterCard. You got a little doji out here today, but you had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days above the 3x3 displaced moving average. If you don't use displaced moving average, you can probably use a 9-day moving average, which is going to be probably fairly close to this. One close back above that line and then a close back below it again would be probably a fairly good indication that the top and MasterCard have been put in for a little while. And what else do we have? We have some other ones out here that look interesting. I wanted to get back to them. Let's take a look at the IWM real quick. What do we have out here? This thing's broken above on light volume too. You had a gapped up right to the previous high, but then volume's been very light on the IWM. Not a bad looking chart if you had any kind of volume out here, but closed back below $86.96. That September 14th high would be a false breakout. Right now, my thesis is without volume, that's what we have right now is a false breakout, especially when we look at the volume the last few days. You normally want to see a sign of strength after the breakout, and we've not had any of them. Another one that kind of makes me want to pause out here is Harley Davidson. Let me go to 1 year. This thing is up on very light volume, up to $52.13. I'm making a little doji out here today. And what I'm looking at is all the action above the June 21st high of 2012. I'm going to sneeze here. Wow, I'm done now. Anyway, we've got June 21st high out here, $50.89, 2.1 million shares. Really didn't have a lot to speak of going through that. Very, very light volume in this. And looks like we might be topping out in Harley-Davidson also. What else do we have? I've been following the agriculture sector. Another one up here that's hanging up very high. We look at Agrium, AGU for the symbol on that. This thing needs to get up to, it's gone 20 cents over that high. But still half the volume. Nice little doji in this one. We want to look at Moo when we look at Agrium. Another one that looks like it possibly could be a false breakout. Not a lot of signs of strength as we broke above that $53 range, which has been resistance out here. Let's take a quick look at corn also in that sector and see. We've had a nice little bounce out of corn based on some reports that a lot more cows out there eating grain and corn than previously thought. Had some nice moves off about that, $42.63 low on January 7th and been moving up. You actually had some very nice volume on the 11th, but since then, the last 3 or 4 days, the volume has been petering out here. I think you could get one more test of that 42.63 range out here without a lot of problems, but I think it's eventually going to get back here to $41.64, which is the March 16th, 2012 high, and that probably is going to end the consolidation and pullback in this corn ETF. Another one of these stocks that is going after this pattern I've been pushing for a while is the BB&T. Of course, we saw some weakness in some of the bank stocks today. This one came down on very heavy volume on the 18th of October. It got down to 26.86 on November 15th. It's come back to finish filling this gap. But again, a very light volume today. We've seen some of these actually fill all these gaps. The volume has remained low compared to the heavy volume down on some of these. So I continue to be very wary of a lot of these stocks. Also, energy, especially crude, up at highs where we're probably going to see in a day or two either crude break down, and if it breaks down at these $95 levels, probably headed long-term to $65. If it breaks out, we could have quite a market to the upside. So probably the biggest mover is going to be commodities next week, and I think pushing that is going to be crude. What we're seeing in Diamond Offshore DO is the September 18th high at $73.50. And you could even look at the October 18th high that had 4 million shares at $72.60. We've gone through those for the last few days, and not a lot of volume on these either. So you normally want to give 2-3 days after you break a high to start seeing volume. Really haven't seen a lot. That makes me think that we're not in a lot of false breakouts. We need some volume, and we need it fairly quickly. We'll be back in just a minute. Again, you can give me a call, 877-927-6648, 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And welcome. We're going to close out the show. We've got a caller. I'm not exactly sure where he's from. Glendale, California. And who we're talking to.
Hi there. How are you, Dave?
Pretty good.
This is Mohammed. Thanks for taking my call again. I was wondering if I could get your thoughts on CMG. I'm thinking about shorting it. I don't know what you...
Well, it's going sideways here. I mean, it's already had its big move off the top. It's not bad out here. I see what you're looking at. What I dislike is this heavy volume up day, but it was a gap down at the same time, so not too bad. Like I said, I'm thinking that we'll probably get a pop on Tuesday. If you could get this thing above $300 and see continued light volume, I think maybe you've got a play out there. What were you thinking on doing? Shorting the equity or shorting the or going short with options?
No, just the equity itself.
I think, let's see, March 13 options out here just to give you an indication. Let's see what the option market thinks. Where do you think your stop would be?
I was thinking of maybe 280, 85, maybe.
Well, that would be on this. You're thinking about shorting it, right?
Right.
where would your stop be on the upside?
I'm thinking about maybe 306, maybe.
Yeah, that's the problem with this is it unfortunately, probably the best sell signal would be a break of the 306 and a close back below it. So that's what I mean, if I was trading the stock, that's what I'd hope I'd see is some kind of pop on Tuesday to get short above 306 and the market to pull back at the same time for you to get a target. You know, you probably see 266, 255, or 233. I suspect if the market started to pull back, that 233 would be pretty good. The downside of this is you're putting out $300, you know, to basically make, you know, if it goes to 266, to make $34. And I'm thinking, do you ever play options?
No.
This is a great example of where shorting a very expensive stock would make a lot of sense with options, maybe not so much with the equity, and just for risk reward. But we've got the, let me take a quick look here. We've got the March 15th options, and if you've got the, you basically can put out, $14 for the 295s, and that limit your risk totally to $14. You know, if they got bought out tomorrow, or someone, you know, decides to really pump this stock, you could lose a lot more than $14. So that would be my thought, is that if you're going to go after a stock like this, you might want to start looking at the options, even if you're not going to play them. Start looking at the 295 and the 300 March puts and watch the price on those. Go back and look to something real quick. But yeah, I mean, you've got you know, $14 on them for a $300 stock. So probably not a bad deal if you were going to look at those options on there. I can see what you're looking at. I'd probably want this thing to go hit 306 and close back below it, and then pull the trigger on this to get into it, though. Okay?
Thanks a lot.
You bet.
Okay.
We'll see you all next Tuesday. You all have a great weekend, and catch me again here at 2 o'clock. Same bat channel, same bat time.